What's up everyone, it's Caddy with MoneyVest. In today's video, we are going to be talking about one more stock that is going to be reporting earnings later this week, and it is actually already trading at a pretty reasonable valuation, I would say, and it's not really considered a growth stock, but it's definitely a very strong, high quality SaaS company that we have talked about in our previous videos. So we're going to do an updated version of that video, and of course go over the intrinsic value, go over the fundamentals, talk a little bit about the technical analysis, the balance sheet. Everything is going to be covered in this video. As always, if you enjoyed, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts. There is going to be that 16% annual discount available till the end of this month that you can also take advantage of it. So links are going to be down below if you're interested in joining. So this right here is going to be the company called Autodesk, and Autodesk is it's a company that we have talked about in the past in several of our videos. It is perhaps, in my opinion, one of the highest quality SaaS companies out there. It's not like an Intuit or a PayPal or any other cybersecurity company or anything like that, or any other SaaS model, but instead they basically provide software for engineers, architectures, construction workers, product design, manufacturing. There's a lot of different types of software that Autodesk basically specializes in when it comes to construction and design and manufacturing, right? So just like Adobe is for creative professionals, Autodesk is for working blue-collar professionals, and of course architects, engineers, all those types of workers. So for example, this right here is a software that costs over $3,000 per year. Powerful BIM and CAD tools for designers, engineers, and contractors, including Revit, AutoCAD, Civil 3D, and more. This right here, again, cloud-based design, co-authoring, collaboration, coordination software for architecture, engineering, and construction teams. 3ds Max, which is going to be 3D modeling, animation, and rendering software for games and design visualization. The list goes on and on. Again, this right here, ShotGrid, a review and production tracking toolset for VFX, games, and animation teams. Design, construct, and manage buildings with powerful tools for building information modeling. So again, architecture, design, games, VFX, modeling, 3D models, all that simulation, rendering, all those things is basically what Autodesk provides. And they do have a pretty significant moat, because as with Adobe, the switching cost is pretty high, because once you get familiar with the software, you don't want to switch, you want to keep using it, right? Because switching over means learning a whole new software, retraining your entire team, takes a lot of time, money, and resources, right? Energy as well. So it's got a very high switching cost. Autodesk software is complex and expensive to learn. Once a company has invested in it, it's very costly to switch to another platform. Embedded usage in classrooms. So Autodesk software is also widely used in classrooms around the world, which means that many engineers and designers are already familiar with it when they are entering the workforce. And this makes it even more difficult for other companies to compete. The network effect, so Autodesk software is more valuable to the people, the more people that they use. And of course, this is a basic because users can share files and collaborate more easily. So more people that use the software, more valuable it becomes. It's got that network effect and innovation, and Autodesk is constantly innovating and adding new features to the software. And this helps to keep it ahead of the competition and makes it the go-to platform for engineers and designers as well. Now, obviously, it's not a smooth sail. There are threats, there are risks to the competition. Despite the high switching costs, the company continues to face a lot of competition, such as Bentley Systems. We got Neemscheck and Trimble and AEC Software, some of the competitors in this space. There's constantly being new technology being evolving, and of course with artificial intelligence and cloud computing, Autodesk needs to stay at the top to continue to adapt to the changing market environment. Economic downturn, cybersecurity attacks, and some regulatory changes are some of the other risks to consider for the company as well. But nonetheless, they've done really well when it comes to revenue, $2.2 billion, growing that to over $4.8 billion. Take a look at that gross profit. $2 billion to $4.6 billion. So very, very strong levels of gross profit margins here, over 90%. It's a SaaS company, right? You would expect nothing less. Over 90% gross profit margins. Operating income is sitting at just a little bit over $1 billion for the company. And we do also have the net income, which has gone from like $228 million to over $800 $223 million. And of course, we do also have the diluted earnings per share going down from 229 million to under 217 million shares. And EPS has also gone from like $1 to over $3.86, although it has been a little bit more fluctuating more recently. It's peaked out at 544. That was in 2021, and of course has been sliding lower ever since. This right here is going to be the margins. Again, 91.5% in gross profit margins. Net margins are 16%, so that's definitely a little bit of a problem because the company can be more efficient, but of course they have a very low net margin. That means after having a 90% gross margin and 16% net margin, that already goes to show that there is a lot of operating expenses for marketing, for SG&A, for R&D, for a lot of things that they're spending on when it comes to operating expenses. And as a result, their net income's really, really low at 16.4%. Now, when it comes to return on common equity, capital, and assets, it is pretty decent. And another one of the metrics that I'm going to start to focus on more and more is the net income per employee, which has increased to $61,000. That's up from $41,400, which is the 5-year average. So that's actually really good. The company is becoming more efficient, but it's still not capped at its profitability yet. 16% margin is actually really, really low. This right here is the balance sheet. Now, I'm actually surprised that Autodesk does carry a lot of debt. They do have over $2.6 billion worth of debt, which in my opinion is actually pretty high, with total cash sitting at just over $2 billion. So we do have a current ratio, quick ratio that's a little bit under 1, debt to free cash flow over 4. And of course, we do have the balance sheet not in the best position, right? So current ratio, quick ratio under 1, more debt than cash on the balance sheet. So net debt's at 368 million, which again is not a huge deal, but definitely something to keep in mind when you are looking at Autodesk. Now, when it comes to valuation, it is reasonable on a non-GAAP basis, a little bit under 30, 27, but nothing compared to the growth rate. It's still a little too high because the PEG ratio, as you'll notice, is going to be sitting at 1.22. But I doubt the growth rate is going to be that high. We'll talk about that in just a minute. Price to sales trading at a little bit over 7 to 8. That's pretty ideal for a software company. And price to cash flow trading at over 31 on a forward basis at the moment. This right here is going to be their earnings expectations. They are going to be reporting on August 24th. And the EPS expectations are going to be $1.73 with over $1.3 billion of revenue. And EPS is expected to grow from $7.28 to over $18 per share. That's going to be a growth rate of a little under 10% because, again, you can see the growth rates are in the mid-teens to as low as high single digits for the company, and revenue is expected to go from $5.4 billion to over $11.8 billion over the course of the next several years. So if we plug in some of those numbers here, the actual earnings per share growth is going to be a little bit over 10 to 12%. And of course, shares outstanding have been going down by about 0.5% at the moment. So let's just plug in 12% for the growth rate for Autodesk. Now, valuation, PE multiple, that's where the disagreement's going to happen because 29, 30 times earnings multiple is a little too high. I'm not going to be giving that to Autodesk. I think closer to 24, since it's a software company with very high margins and the potential to actually increase their net income margin as well from 16 to maybe 20, 25, 30% over time is huge. So 24 times PE multiple is reasonable. 12% discount rate, 10% margin of safety, and of course 0.5% in share buybacks. We get down to a fair value of about $161. And right now it's trading at about $199 per share. So actually not that far off from where the fair value is. If you come over to the sensitivity grid, even if you decide to, let's say, go with a lower P multiple, let's just say that you go with 22 or 20, that's when we come down to like sub 150 levels for Autodesk in terms of that intrinsic value, right? But right now 161 and the price is at 199. It's actually not that far off. It has dropped quite a bit from 340s. It's still down about 42%. And $170, this right here would be a very strong area of support and of course an area of demand, and my intrinsic value would be a little bit closer to those levels. Of course 161 is still below the 170 support, but at least if and when it actually gets down to that level, we can start to look into it in more detail. So this right here is going to be that area of support to watch for Autodesk. Very, very nice opportunity to also potentially swing trade Autodesk at those prices to potentially trade it back up to 230s. And right now we are trading inside this potential symmetrical triangle, making lower highs and higher lows. And of course, if you do end up breaking down, 170s is going to be that support. So I hope you guys enjoyed this video and a complete overview and an updated analysis on Autodesk. Let me know your thoughts down in the comment section below. What do you think? Are you buying, selling, holding? What are your thoughts on this company? I would love to know from you guys as well. As always, if you enjoyed it, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount until the end of this month, and I did open up a few more spots if you want to take advantage of that as well. Happy investing, and I'll see you all in the next video.